Hey guys, good afternoon. It's Denise Donahue, your favorite mortgage nerd, and this is our mortgage nerd news. And there's four things that I want to talk about that are so important. Number one is, what is the Dodd-Frank Act? Number two is, what part will actually be repealed? Everybody is talking about how Donald Trump said that he's going to be repealing it, and I don't actually think he's going to repeal the entire Dodd-Frank, but which part do I think that he will repeal, and how will that affect us? Three, oh my gosh, the Dow Jones is still at 20,000 points. That's amazing. And then four, why aren't mortgage rates going up? Usually when the Dow Jones is up, it causes mortgage rates to go up, but that isn't happening. So why is that? And what are we expecting mortgage rates to do? So let's jump in. First, what is the Dodd-Frank Act? So in 2010, they passed the Dodd-Frank Act, and everybody, especially in my industry, absolutely hated it. In fact, a lot of the mortgage bankers that were around in 2008 got out because they thought that the job just got too hard. There's a lot more disclosures, a lot more work that you had to do, but in all actuality, it is actually, believe it or not, I think a good act. What it did, it was an act that promoted financial stability for the United States by improving accountability and transparency for the financial system, essentially ending the too big to fail theory. And the whole point was to protect the American taxpayer by ending a lot of the bailouts and making sure that you're disclosed proper fees and costs. Now, this includes things like credit cards, some of the banking institutions were affected, but of course the Dodd-Frank Act had a large impact on mortgage banking, and that was specifically through the CFPB. And the CFPB, I think, is not going to be affected much in the part of the repealing of the Dodd-Frank Act. And who knows? I don't have a crystal ball, but I don't think that it will. What I think Trump's plans are is my prediction is he wants to give more power to smaller banks to be able to lend to more of the smaller business owners to create jobs. It's all about jobs right now. So that's what I'm predicting of the massive Dodd-Frank Act in itself. I don't think it's going to be much to do with the CFPB. Hopefully it's to help increase our job market and be able to help our smaller business owners. Again, stay tuned. We'll see. I'll keep you posted. But next I want to talk about the Dow Jones. The Dow Jones is over 20,000, which is great. We haven't seen that. So a lot of you guys, if you have funds invested in your 401k or in stocks, your accounts should be up. If you haven't met with your financial advisor, or worse, if you don't have a financial advisor, please let me know. It is so important, especially now, that you understand every aspect of where your funds are going and the type of tax that you're paying on it. There's three different types of tax vehicles. You've got taxable income, which is basically your paycheck that you bring home. You're already taxed on that money. You've got tax deferred accounts, and you've got tax-free accounts. And many people just kind of roll by the seat of their pants and hope that by the time they retire that they saved enough money, they've put money in their 401k or 403b, and they've done what they've needed to do. But nobody actually pays attention to the numbers, and they don't meet with a financial advisor either because they're afraid or they think that they're going to be sold. But I work with the very best. I trust them with my own money. So you please take this message, go meet with them, because it's so important. There is a lot that could happen over the next 4 to 8 years, and you have to be smart with your money, especially now. So the Dow Jones is doing great, but what's interesting is when the Dow Jones is doing great, usually mortgage interest rates go up, and that isn't the case. So why is that? And the interest rate chart is this one here. You'll see this is the bond market, and when bonds are up, interest rates are down. And so what you'll see is this is a 3-month look back, and you'll see that the bond market is very reactive. So you'll see that since here it's gone down and then up, and again when bond prices are up, interest rates are down. So interest rates are down right now, even though the Dow Jones is over 20,000. Well, the reason why that is because there were headlines that went out about there was 227,000 new jobs, that's what all the headlines said, created, and so the markets reacted to that. But if you dug down into that report, the majority of those 227,000 jobs that were created were not the right jobs. They were jobs that fell below the median wage earner, And so although there were more jobs created, they weren't the right jobs or the jobs that at least fuel our economy, which is why the bond prices are still high and interest rates are low. We know that the three biggest factors that affect the interest rates or the bond market is the unemployment rate, the GDP, and inflation. And so those are all things that I monitor on a daily basis to make sure our clients get the lowest interest rate, best rate, lock in, or refinance when they need to. But all in all, the Dow Jones is up, interest rates are down. It's going to be another busy year. So I'll keep you posted. But what I wanted to point out and what I really wanted to stress to you guys today is that you do need to meet with your financial advisor. I met with mine yesterday, and we talked a lot about how we're going to diversify my funds. We're dumping a lot into tax-free funds. That's because if you look at the tax income chart, our income tax brackets are actually the lowest that they've been in like 20, 30, 40 years. Even though we all think that our taxes are way too high, if you look at the chart, they're lower than they've ever been. And so by the time I go to retire, our tax brackets are probably going to be higher, even though when I retire, I'll probably be making less money. There's a very good chance that the tax bracket's going to be a lot higher in 30 years. We have to have a way to pay for Social Security and Medicare and all that kind of stuff. So it's just important. If you don't have a financial advisor, please let me know. I can hook you up with the very best in town, but it's so important to do that. They are not going to sell you something that you shouldn't be in, but I meet with so many clients on a daily basis and they just don't know what to do. And because they don't know, they don't do anything. And I help so many clients buy a home and have a mortgage during retirement. And it's just so unfortunate. You can be strategic and a little bit matters, but you have to have the right person advising you on what kind of accounts to put your money into, and you have to have a tax strategy. It's so important. So anyway, stay tuned. There's going to be a lot of Mortgage Nerd News updates because we've got a lot going on with Donald Trump and the rates. So if you have any questions, let me know. Thanks for watching, and I'll be in touch. Bye.